things. Well,
Yeah.
tomorrow's news today, you know?
I'm sorry?
Tomorrow's news today. That should be the title. With the whole Riksbank thing, it's all over the news today.
Yeah, but we only if we know what to do with it. As I've always maintained, one day God's going to give me tomorrow's closes, and I'm going to screw it up anyway. But that's okay. Let's go. You know, you saw I that's the unedited, so that's not for distribution.
Yeah.
But there were things in there. And Weidmann, right on target. You know, we talked about it on Friday. We went back and forth on that chat. But that piece in the FT, again, nobody talks about it. But why do I see that as so important? I just do. And you see, there are a lot of people, and again, we talked about last week, who've been short the DAX. And I look at that and I go, yeah, you know what, again, and we discussed this in terms of relative value, and the relative value aspect of it is really holding. Now, today was interesting, though, because the Bunds and the European debt, the futures market, were all higher. And then they followed the U.S. down today. Today's the first day that Europe didn't lead. So if Europe was weak and the U.S. was up, then the U.S. would break. Today, Europe followed the U.S. down, which I'm not sure why. Interesting. You know, we've seen a big move in the curves. You know, I'm watching them now. The 2.5s and the 2.10 certainly back to that 25 area. Because I think they're getting a sense, number one, that commodity prices that we talked about, when was that, on Friday or Thursday? Friday. We talked about that, and that chart's starting to look interesting, as you see. Even gold, you know, gold did not break today. Again, it was up and held on pretty nicely on Friday. And yet with the equities doing what they're doing, it's really kind of surprised at gold. The other metals, that didn't surprise me so much. The copper, to me, makes perfect sense. But interesting, though, is that the DEES March copper is actually into backwardization, meaning DEES, which is the spot market, is actually over the deferred, the March copper. So is there somebody's buying a lot of, or taking delivery of, which is, again, buying, moving stuff out of storage, because that's why the spot is jumping. So interesting. And as I say, as far as I'm concerned, that trade agreement should be named the Electoral College Act of 2019, because when I read through it, I mean, the really impact is on the ag states, and that goes back again to Brazil and Argentina when Trump went after them a couple weeks ago, and I said it was wrong on every account, but to me it reflected that the White House and the committee for the re-election of the president. Oh wait, that's the creep. That was under Nixon. The committee for must be getting nervous. Well, that's what they called it. You know that.
Yeah,
and
I know, but it's hilarious just to think about.
I know. We may as well bring back the acronym. So I mean, that's everything was directed against the ag states, and so he's trying to boost his presence there because he can't win without him, just like he couldn't win without him in 2016. And again, this is not a political conversation. This is just the lay of the land, and we're going to have to start taking apart this and watching. It's a little early, but we'll start watching some of the polling that will be taking place, you know, in the late first quarter of the year. Right now, it's just too early. But they are concerned. There's no question. And I read through that, and I read through what Lighthizer had to say. It seems like he fell on his sword here, because I don't know that they got as much as they thought they were going to get. And the Chinese, let's see how the Chinese, they each talk about that they don't have really much trust. When I listen to Kudlow, well, we're hoping that, they adhered to it. There's a lot of hope in this. So we'll see. A lot of stuff to unfold, but I'm really more interested in Europe. And I know today was currency expiration, and we'll look at those gaps. So you might get some type of break, but actually the euro has performed pretty well today. The euro yen is really interesting, and that's not to be a diminished chart, by the way, because that one has been it's still lower on the year, and especially when it's starting to make a move here, and I'm not sure that that's not helping the DAX as much as actually it shouldn't be helping the DAX. So let me roll that back, but it will certainly be helping the Nikkei because the yen weakening against the euro makes Japanese businesses that much more competitive, especially coupled with their fiscal stimulus program. I'm giving you basically what's in the blog. Boris Johnson, this guy is a brilliant politician. You can, the media dirties him up by comparing him to Trump. He is nothing like Trump. He may be a little goofy in some ways, but he's exceedingly bright and a very good politician because his first move right now is he's moving to reward the northern industrial and central England industrial base that came out and supported him big against a Labor candidate. So he's moving forward too with an infrastructure program, and they have some room here. The United States has really been profligate, and they blew that whole the corporate tax cuts have been certainly beneficial to U.S. corporations, but the rest of it was just blowing money as far as I'm concerned. So, and now we're in a political year, so we're not going to get really anything. So it's now your eyes better turned to what's going on in Europe. China is certainly trying to do some stimulus, and you couple that with the Japanese. So there are other places in the world. And now we'll dig into Weidmann because he has, what's the exact title of the FT article? Hold on. Let's see. I'm sorry. I'm wasting a little time here, but this is important. I'm sorry. Let me go in my trash. It's probably there.
I'm looking through it right now. I read it. I'm opening up the paper to see it.
Yeah. Hold on. Let's see. Shoot. What am I doing? I got so many things in line here. Sorry. Come on. Nope. But I'll find it right now. Okay. Here's the article. I got it. The title of the article is Head of Bundesbank Warns Against Fetish of Balanced Federal Budget. Okay? That's Weidmann in a wherever he spoke over the weekend. I think it was with the in an interview with the Süddeutsche Zeitung, which is the South German paper, finance paper, and he was talking about that there was room. And why did he say? Because he said, and this is critical, that since 2007, with the drop in interest rates, the German government's been saving 55 billion euros a year in interest rate payments. So he's making the case for a very robust fiscal stimulus package and giving everybody cover because, as the German savers, which has been a big issue for me, have been absolutely devastated by design and financially repressed, there has been a positive outcome for the German government. So Weidmann is saying in a very Keynesian fashion, look at the savings of the government ought to go into spending for in a manner of fiscal stimulus, which in this case would be infrastructure, and they have the room to do it. This is very important because this is certainly a 180 by Weidmann, and he's getting very cozy, it seems, with Lagarde. So my sense of this is, and we're going to watch this, is the trade-off, and again, Lagarde is a politician, and she's a very good negotiator, and she's also a good compromiser. And if she could roll back interest rates from -50 to 0, helping the German financial system, because don't forget, German banks have said that they're going to start applying negative interest, which means that large depositors, anybody over 100,000 euros from the numbers I read, we're going to start being charged negative interest rates. Well, that's devastating. So they need to get rid of that and forget the tiering system that Draghi went to. That was preposterous. So do we get the roll back to 0, but it's compensated for with fiscal stimulus all throughout Europe? And again, I will refer back, and Judd, you were nice enough to put that out there today. Again, the euro, Swedish euro stocky, as it's referred to in the banking world, is lower yet again today. And the Swedes, it's a very important meeting because they said they're going to remove the negative and go right to 0. So that will lay the groundwork for the ECB to do the same. So a lot of things going on here. You know what? And I'm paying very close attention. And believe me, the markets, they may hit the DAX on that news. They may hit the Euro stocks on that, the Euro stocks 50 on that news. But you know what? What's the difference? I would argue that 0 is far better than negative because that's what we've been shown. And that's what the Swedes are saying. So let's watch here. And that's really the basic, I think I covered everything that I wrote, that I scribbled out yesterday afternoon. I don't think I covered that. I covered so that really, but I think these are very important things. And again, we got the dollar index underneath staying down below the 200-day moving average. It's hold on, let me just get up to date here. We're not quite lower on the year. It closed, if I'm not mistaken, at I'm talking about the dollar index. Again,
yeah, hold on a second. I had the wrong month up. It's the month.
It doesn't matter. I'm just looking at
expired.
It closed at 96.06 on December 31st. So the dollar index is still a little higher on the year. It's almost about 0.8% higher on the year. No, I'm sorry, about 1.2% higher on the year. So, but we got room to go here. Now, more importantly, somebody made this point, and John Others made the point, and it's a very good point. Put up the dollar index going back to, again, November 2016, the night when Trump was elected, okay? That's the week of November 7th of 2016. And we had a range that week of the election of 99.13 to 95.88, closing the week on the high. As people were uncertain about Trump and a little bit nervous, although we saw what the S&P did on election night. We saw what the bonds did on election night. We saw a gold rally and then get whacked on election night. And then the dollar rallied a little bit as it began to understand, what he was going to push for. But if we really, if we think about this, the dollar is basically unchanged, or actually a touch lower from the week of Trump's election. A little bit lower. So, and this is a president who very openly wants a lower dollar. Absolutely would like a lower dollar.
Hey, Ira, it's Matt.
Oh, you're back from the dentist. Yes,
I
I hear you.
No, I'm on my way.
Oh, you're on your way.
I'm on my way. Yeah, and I'm not to the dentist, but to I got to draw blood. But anyway, I wanted to ask you. So last time I was having a conversation with a guy who works for a steel company based out of the Netherlands, and they have a factory in Wales. And he had worked for U.S. Steel for a long time. And so we were talking just about the difference between the steel they produce and the higher quality that they produce in U.S. Steel, and the different sorts of things that they produce that don't get made in the U.S. That, you know, just anecdotally, it was an interesting conversation from the standpoint that we were talking about all of these issues that we're talking about now, including the president wanting a weaker dollar, with negative rates, begging for negative rates, as if he seems to know that is going to be a good thing for our economy, and the effect on the stock market that is already being held up by debt creation and continue to be held up for debt creation. And he was absolutely flabbergasted when I asked him the simple question is, what is the Fed's exit strategy? And it dawned on me that you know, more of a comment than a question, but it dawned on me that he was shocked. And, you know, then all of a sudden, all of these guys at this Christmas party who usually would be talking about the Bear-Packer game ended up talking about these macro global issues and how best to protect their families.
Really?
It's a very thorny issue, and also really, really kind of interesting to see that happen at a Christmas party. But the exit strategy, and nobody's ever thought of these things. You know, these guys they're hardworking, working stiff guys. Most of them, you know, they're carpenters and union guys, and they've never thought they've never thought of these things. Quantitative easing, that's a complicated word they tune out. So I guess
no, they're not. That's right, because if they thought about them, they would hold a lot of people accountable, but they don't until it becomes a crisis. But that's the way we're taught, because that's the way the news cycle works in this country. What's the saying? If it bleeds, it leads. So until it becomes a crisis, you know, Dick Gregory, I know it wasn't his, but the first time I ever heard it was from him, which is, the revolution will not be televised. And it's really a very deep meaning statement, because we're so addicted to what the TV brings, which is a visual. It's a visual. And you know what? And Santelli and I have discussed this many times, because I get a little irritated, because so much of what Rick and I have discussed over the years, I said we should compile a collage and put it all together. We've been so far ahead in discussing things, and then, you know, the idiots, they don't pay, I'm talking about the anchors, they don't pay attention to it, again, because there's no picture to go with it. If it's not a picture, we just don't get it. We don't listen hard enough, and we don't pay attention. And that's a criticism of myself and everybody else. We are so trained to see the pain, because that's what we want to watch. We want to watch the pain. So until you see, until they can bring a camera out to see people being evicted and foreclosed upon, we don't pay attention, even though it's there and there's a process to it. It's just the way we are captured by the media cycle.
Well, the producer needs a rating, and they're not going to put it up there if they can't get clickbait on it.
Listen, I've done so much media over the last. Yeah, 2:30. Okay. All right, hold on a second. Okay. So you know, and so anything that has to do with process, people don't pay attention to. You know, that's why they say, oh, nobody saw the subprime crisis. Well, that's wrong. I can say that I saw it, and I have it on radio. I have it. I saw it. It's in the house, inside the House of Money. I talk about it now, but you can't take a picture of it until you see the pain. Until you see people from Lehman carrying out their boxes and emptying out their desks and carrying out all their stuff, and the cameras are waiting for them, we don't pay attention to it. We're all guilty. We're all guilty. And that's unfortunately what moves markets. Now it's tweets, of course, but then it's a tweet with a press conference, and we all sit glued to, you know, whatever question is. But a tweet is a form of, because it's concise. There's no context to it. It's just, you just put it out. And then what are the algorithms? The algorithms are just as guilty, because it's almost like we're living in what philosophically was called logical positivism, which is if you can't visualize it, it doesn't exist. And I'm being very simplistic. And I hate to be erudite, but there were, you know, out of Austria and Germany in the 20s, there was a school of thought, logical positivism with Wittgenstein. But and that if you can't visualize it, it really doesn't exist. So if you say that you know, this and this and this, but you can't really visualize it, well, I'm not going to worry about it. So when do you worry about it? When it's already a crisis.
And isn't that true? So how can we, well.
Excuse me, Matt. I dropped something into your chat box for you to look at, something Peter wrote.
I saw it. Wait, hold on. You're just, trade spat. That's right?
Yeah, he just put that in there as a comment, so you can read it when you want. Go ahead, Matt.
Who is that? Who is that from? Oh,
Peter,
thanks,
quickly.
Peter. Yeah, I read it, Peter, and that's a very good comment. Thanks. You know what? We sit on the precipice of all this, and it's not to be taken lightly. It's a very important issues. And again, we sit quietly. Why? And listen, the news really was pretty good last week, right? We got Lagarde. She was good.
Yeah.
The Fed was, you know, hey, yawn, more of the same. Okay, I got you covered. Fine. The vote in Britain certainly favored the Boris Johnson and moving forward, rather than Jeremy Corbyn, who got just spanked so badly. And you know what? It's just so interesting the way people spin it. You know, he got spanked. He lost in areas, you know, that they called was the red wall, where all these were labor districts for 100 years. And, you know, and they saw through it, because, you know what, people really don't want, it seems, at this point in time, now it may change, but they don't want the old tired socialist practices of just redistribution. They want the world, and they want their leaders to deal with the effects of globalization. Globalization meaning that money has been allowed to float around the world freely, unencumbered, pursuing cheap labor. Because with the advent of technology and that with technology coupled with advances in transportation, you know, it's very easy to move goods quickly. So money, that's what it is. And stock markets have absolutely responded correctly, because not only is money cheap, but the fact that it flows and searches out cheap labor. But who's paid the price? In the developed world, whether you're in Germany, whether you're in France, whether you're in the United States, whether you're in Japan, it's been the labor, and we're talking Marx, but labor has paid the price because the pressure has been on them. Because what does capital do? It threatens to move to the next place, which it does anyway. So these are important things, and so rather than just punishing, they want to know, what do something for me, train me to take advantage of the new things in the economy, train me to be more advanced in some healthcare field, train me. So meet my expectations like that, rather than just punishing the wealthy. We're not there yet. And I think that's one of the lessons to be drawn out from Boris Johnson. Now, I'll be proven wrong if Bernie Sanders or Elizabeth Warren actually get the nomination and defeat Trump. But Trump actually spoke to those people, unlike Hillary Clinton. She didn't speak to those people. She called them deplorables, and and didn't even bother to go there. So they punished her. But Trump saw that because the wisdom of Steve Bannon. And I haven't gone to see American Dharma yet, but Bannon fascinates me from a political perspective. I like to watch him because he's got a lot of wisdom. And it doesn't mean that I like him as a human being. The jury's still out in my mind, but I do pay attention to him because I think he's the one who really put it all together. And Trump really told him to get out of the administration, because if he actually held an appointed post, he would be subject to a lot more interrogation. And right? So now he just parades around the world, and everybody knows he's Trump's emissary, but without official standing. It's really interesting to watch it. So these are the things that are very important, and it's going to help Lagarde. That's why, again, I tell you, I'm watching Europe very closely here, and everybody's so bearish. Although I see some people starting to turn. And listen, it may fall apart, but again, we discussed it 2 weeks ago as a relative trade. That where am I at on a relative trade basis? Anything else, I don't really care about, because there are places that are going to do better than others. So,
right.
Anything else? Well, you see the commodities really put in, beans shot higher, of course, and a lot of that has to do with the Brazilian real, by the way. Since Trump made that comment, the real is, rallied quite a bit, and that's with them cutting rates to all-time lows in Brazil last week, by the way. The Russians have been cutting rates. They cut rates again, too.
How low did they cut?
4.5%, 5%. Hold on. Not hurt. I'll go retrieve it. I had it and I got rid of it because I think they're at all-time lows in Brazil. And the Russian, I'm telling you what, the Russians, the woman who runs the Russian central bank, it's at 5%. The Selic rate's at 5%. Oh wait. Yeah. No, hold on. I think it's lower. That's old news.
And that was in
October. I think it's at 4.5 now. I'm pretty sure it's at 4.5. Why can't I? Can I get it up to date? Stupid, of course. But I think it's 4.5 now. But the Russians have cut rates too, and she's really good. But in Russia, with the rate where it is, it's okay. I'm sorry, I screwed up. I gave you bad information. I don't like that. Yeah, it's down to 4.5% in Brazil. So they're actually, where they had real yields because the rate was so much higher than inflation. Yeah, inflation's been dropping pretty dramatically because the Brazilian economy is in a slowdown, but it's probably about neutral now. zero real yield. But the Russians still have a positive return because inflation is well below the interest rates, but they just cut them again to, let's see, she is really good. I am impressed by this woman. She is just tells, and then, this was interesting too. I may as well prepare everybody for the week. It's in the, it'll be in the blog tonight. It is rumored that one of my favorite bankers may become the governor of the Bank of England, which is Kevin Warsh. Now, why they can take somebody from the United States and put him in that position, I can't tell you. But Mark Carney came from Canada, but he was in the Commonwealth. But I don't know what Kevin Warsh connection would be, but he's, I guess, in the final three. And if the Bank of England got Kevin Warsh, I mean, you see what's going on. This is now the pound has rallied, and of course we know the pound has rallied fairly significantly against against the euro and a lot of other currencies. But yet, what has happened? The FTSE has really performed well. Up really good today too. 2%. It's up 2% today. So that is important because even with the currency, but if you go over a 10-year period, the British pound is still over that period fairly weak. Let me put up a monthly, get you the 200-month moving average.
Yeah, I just went.
Yeah.
And you had dollar rate months in the FTSE too. Yeah,
but the 200-month moving average, just for longevity, to give you really good context, which is
160.
Is 160. So you see on that basis, and that's why these guys like Carney, and I take them apart in the blog because can't stand this crowd. And even Blankfein and Jamie Dimon had this so wrong. Goldman, they should put Goldman out to pasture because for a while, yeah, they should put him in. They should put him in the stocks because no, I'm serious. Because they donated money to the Remain camp. They've been dead wrong on everything as to how this plays out. And while they were all talking about moving out of London, there were a lot of private equity people I know who were looking at Britain because of the cheap sterling and the push down in real estate, who were looking to actually do some buying there, believing that London had become very cheap, especially if you were in dollars, so or even euros. So again, the depreciation in sterling provided a safety outlet.
Monthly, I wrote, besides the breakout into the cloud and above the 50-month and all the fibs, it wants to go up to 137. And above that, then I think it really gains momentum. Okay, but again, let me just tell you this. The Russians lowered their rates to 6.25, and they have inflation at 3.5 to 4%. So there's still a real yield, unlike in the United States, unlike in Germany, unlike in most of Europe, unlike in, Japan, it's too hard to decipher. But it has a real return. So I'm watching the ruble. You know me. But there's a game that's played in the ruble every month, okay? And this game is, they want it strong because they have to change it for dollars to pay a lot of stuff. So they have a game at the end of the month with a ruble every month. Yeah,
that's a good point.
Bruce Kidd is the guy that runs those transactions.
Well, so that's an interesting observation. But here we are. And so we talked the other day that the euro sterling, especially as the sterling was rallying, and the euro sterling was, of course, falling down. And where was it going to? Right to the Brexit numbers on that week of June 24th, 2016. And we're in the teeth of it. We haven't done more than that. That's all we are. that is all we are. And you can look at the dollar index relative to that too, because a lot of things got shaken up in that environment. Let's see where I got it. Pretty sure that this is right. Let's see where. Oh, so where was the euro that week? Made a high of 114.20 and a low of 109.10 and closed at 111.16.
Yeah, and we're not much better than that right now. Yeah.
Exactly. I mean, really, you have to sit here and what have we done? Not much. Not much, as you see with the Trump election. So for everybody who thinks that they've missed a lot, buckle up, you've missed nothing. And that's what we're preparing for. Yeah, you know what? That's what we're preparing for.
I mean, that's why, my FX section of the DMI has been blank for months. I rarely talk about the currencies because there's just nothing going on except for this, this pound move. And now some of the peripherals, like the real and the ruble and some of this other stuff that nobody really trades anymore, or at least our group doesn't.
Yeah. Okay. Well, but it's to prepare again. Let's anticipate where some of this movement is going to come. And it's interesting that I know that U.S. rates are higher today, of course, across the board. I mean, look at the euro. These euro dollars are 6 basis points higher. I'm talking about yields. So you've seen some interesting moves in this, and yet the dollar not really doing anything. So where we used to get that move, so we got the dollar is not doing anything. The S&Ps are certainly higher. The interest rates are higher. It's an interesting board. Would everybody agree with that? Because based on some of these correlations, okay. Any other questions? Because I'm on a tight leash, but I got a little more time.
All right, guys, anybody else? I mean, I dropped a couple of notes in.
Yeah, I saw, good ones, lower income, yeah, you know what? And it is, but wages are rising, but, let me speak to that. They have and this is why Powell, he's told you how dovish he's going to be, because he wants those workers in the lower 20% who are just making it back to the workforce or who have not partaken. The Fed is now in to they know, they are very aware that they have created again, as Milton Friedman would say, there's no free lunch. So by their movement of keeping interest rates so low and now this is Ben Bernanke at Jackson Hole in August of 2010. He called it a portfolio balance channel, which was to get people out of more static assets and be more dynamic with their money. Well, that has created ever more disparity because who's to take advantage of that? People who had money. So the wealth factor has grown, the wealth differential, I should say, has grown ever wider. So Powell is very aware of that. And the Fed is willing to run the economy hotter for longer, and they're going to sit back to see how high wages go. And if it's the bottom end who is coming out better, I think they're going to tolerate that. We don't know that 100%, but I'm lending a probability of that to 65 to 70%. Now you say, well, you're really hedging yourself. Well, I can't know what's really in his head. I can only discern. And as Matt would tell you, we look from his speeches, we look for nuance and context. And I think that it's there. Willing to run hotter for longer, and that's the symmetric 2% inflation number that they like to throw about. So that's where we are. And I think I think we're in for some, I'm not going to say a wild ride, because I don't want wild rides. I just want to search out opportunities that have been not in play for a long time. So, and you can see it. What did we looked at the euro from Brexit 3 years ago, more 3.5 years ago. We're at the same level. So there's been a lot of stagnation in markets where we think we've seen so much. It really hasn't been that much. It's all been equity driven. We've had some, violent moves in the bond market, but I'm of the inclination that we haven't seen anything yet there. And people say, well, would you buy bonds? I said, why? I look at everything, as a risk-reward ratio. And my risk in buying bonds is far greater than even in the stock market, I think. It's not a place I want to go and hide out in any way, shape, or form. So we have a lot going forward. I think it's really going to be an exciting year next year. And we're not even talking about the politics of impeachment, it's just there's so much going on in the world. And we're talking world. And that's assuming, don't forget, this is not going to be signed, phase one trade agreement until next month. Next month's a long time in this world.
All right. Well, thanks, Ira. It's always insightful. Gives us a lot to chew on.
Yeah. And again, we're going to really push this format to really get at questions. Because really, and I know Matt and Judd, you guys are working on this, and this is the only thing that allows people who are traders or investors, if they have a longer duration. It's like when we talked with on Friday, we had a lot of input from what's the name of the construction business, who really was able to tell us about the impact of China on the.
Yeah, it was Joe's comment.
It was Phil.
Yeah.
It was Phil?
Yeah, Phil.
Yeah, Phil Ricciardi.
That was a great discussion because it gets things out. But this is what, and this is what you really have to make people understand, is this is what professional trading rooms, hedge funds, they sit for an hour, 2 hours, and knock things back and forth, ideas to generate the best trades. They don't just sit there and bang away on computers. They sit and they discuss it. I've been in there with them. I've been on phone calls with it. This is how they generate longer term ideas, but on a day-to-day basis, because a lot of them only are trading, 1, 2, 3, 4 day horizons, unless they really get a momentum trade moving. But this is what they do. And I've been in rooms where they did this very well, but then they started getting successful, and they stopped doing it because they found excuses as to why not to do it. I'm too good. This is where it really happens. So, I think that's what the real benefit of this room. And we've, and I know, Judd, you've been very nice. We have pushed some good ideas out. Yeah, we've been wrong. Of course, if you're not wrong, you're not taking risk. I got news for you. Then you may as well stand in front of your brother-in-law and get the trades and not take your foot off first base. But there's not a long life to that.
There's no life to it. You're right.
There is no life to that. And we tell people say, well, why do you tell people, I said, because I'm telling you that if you want to do this business right, it takes a lot of work and effort. I told that to my daughter, who really understood this business, but she said, Dad, honestly, I don't want to work that hard. So she was honest.
It takes a lot of work. And, to people to understand that we're up, we take a look at stuff at night, we read at night, we're always doing homework.
It's definitely a lot of work, but you have to love the game. That's what it's all about.
That's right. And that everybody who's in the arena is doing, they may have, that was always my point with Goldman. People would say, why do you work so hard? I said, because I don't have a staff of 10. I got me. But by being in a room and talking, one becomes many. And that's a benefit because, you know, again, you know, it's like people say, I'm not looking for people to agree with me. I don't need that. You know what? I can go, my dogs will love me and lick me regardless. I don't need validation. The market will give us the validation. We need discourse because you got to kick those tires hard and go, you know what, that's a stupid idea. And I'm going to go, you know what? Yeah, I didn't look at it from that angle. That's right. That's a stupid idea. And that's what those sessions in any high quality hedge fund, that's what they do. That's a stupid idea. That's a stupid idea. And you know what? Let me think about it. You might be dead right. It may be that stupid an idea.
Yeah,
that's what we try.
Not the room today. We told her not to be short on Friday. She didn't like it. She's not here today.
Okay. That's, you know what? Hey, you know what? When I trade best, I park my ideas for a minute and wait to see them evolve. So today, you know, I was able to buy the platinum, which I liked, and I sold it. I bought all my euros back, as I said. So I had gotten out and was able to buy them better than I had gotten out at, and I was lamenting it on Friday as they were 70 higher, but by the end of the day, they had actually gone lower. When I'm not pushing hard,
get that another 50 cents lower.
Hey, Ira, I got a question. What's your viewpoint on platinum? I mean, it seems so attractive in the space, you know. It's so cheap.
That sounds like Angelo to me, right?
No, it's Peter.
Oh, Peter, I'm sorry.
Peter.
Okay.
I don't give two hoots about platinum right now.
No, it's actually not, but it's starting to move a little bit. And I'm sitting here watching palladium. I don't know if you watch palladium.
I have some palladium that I bought it right. I have physical palladium. I've been selling it a little bit here and there.
Well, that's all right. Matt's been stealing it out of catalytic converters in Bridgeport at night. I know. So whenever you park it, he takes out the palladium. No, that's smart because if you look at a chart of palladium, you'll go, oh my. So I'm just looking at the platinum just to see if it starts to, you know, again, economics is substitutes and complements. Once something gets so expensive, somebody starts looking for alternatives, whether they're synthetic or just can replace it. And platinum has been a very cheap metal. I mean, you look at platinum gold, which used to be the harbinger of any metals rally, along with silver, but platinum always traded premium to gold. We're at a $550 discount, and we've been more steeply discounted. So
that's what I'm thinking too. Yeah.
Yeah. Well, and if we get an across the board commodity rally because money is tired of equities and starts searching for other things, platinum will become a beneficiary, especially because the Asians, and I don't mean that in any, not all Asians. I hate to group them like that, to say that because it's very. I don't mean to be demeaning. It's just I don't know another way to put it without going through a litany of nationalities. So when I say Asian, the Asians have used it in jewelry for a long time. You know, and so when it gets cheap enough and the Asian economies get strong enough, I think you'll see jewelry demand go up too. So it has an industrial base to it as well as a precious metals base. So that's why I'm watching it.
And you got to watch platinum yen when you're looking at it.
Yes, right. But it's a very good point. Very good point.
Ira, pardon me if you guys covered this already, but did you cover who do you think is going to blink first with respect to this new spat between China and Germany with regard to Germany banning Huawei's 5G, and then China saying we're going to restrict the sale of German cars in retaliation?
Wait! I thought that they were going ahead with Huawei. That Merkel has. Did I miss something today?
Yeah. Well, I'll read it to you. The Chinese ambassador to Germany has threatened retaliation if Berlin excludes Huawei from developing its 5G network.
Okay, but Merkel has already said that she was going to do business with Huawei, so Merkel's going to get herself caught between the Chinese and the U.S. Because last week she was adamant that they were going to entertain Huawei, and the U.S. ambassador, what's his name, went to that they were unhappy. So everybody's going to be unhappy. I think Germany's subject to everything, so they're going to have to be very diplomatic in the way they play this.
Who do you think is going to blink first?
I don't know. Don't know. Can't say. I don't know.
You know, it just gets better.
Well, yeah. Once you go down this road, there's a lot of traps, and you have to be very careful because there's just a lot of traps.
Well, you know, people need to realize China plays hardball, not softball.
Oh, yes, and they also play the long game.
Yes.
You know, they're not quarter to quarter oriented like United States Wall Street capitalism is. They play a long game, and they can absorb some hits, far better than U.S. can, and they'll wait you out. As my son would always yell at me, I had a term for it. He would really get upset with me because they will dance you. They will dance you. Anybody who's ever done business with the Japanese will dance you. I've been danced by Japanese banks when I was seeking out bank lines for arbitrage, and they could dance me. I feel like Leonard Cohen.
That's funny.
Well, Leonard Cohen had that song, "Dance Me." I forget. But yeah, that's a very good question. We have a lot to discuss. But again, get to the format to push the questions, and then we can really turn this into an active endeavor where people garner a lot, and there's a lot of trading opportunities built on everybody's input.
Yeah, guys, I mean, it's great that everybody participates once Ira's in, but it's even better if you give us some questions or some topics that you want to discuss, and then Ira can give them a little bit more thought, and I can, prepare some, some quote boards, and, I can do some work as well. It'll be a better discussion.
Yeah, absolutely. Yeah, and that's what it's got to be all about, because you can really generate some good ideas.
Yeah,
and I'm not talking about BS. These are well researched. What you guys do a lot of work technically and putting things together, and my research is in depth. I don't just, I'm telling you get the benefit of a lot of sweat. It just does not fall out of trees. But you know what? But we all help each other in that regard.
Yeah, Anders, you can post that in Pax's room. You can send the questions to him. You can send them to me, whatever you like to do. Brett is asking about LQD. I mean, I don't get signals off those things. So the high yield, the LQD,
the LQD. I know, and again, I'm not going. I know they've had a good year, but the bonds itself have had a good year. You know what? Some ships will sail without me. And I'm telling you, I parked myself in preferred financial stocks, J.P. Morgan, Wells Fargo, which I had to hold my nose, but that was the mercenary, because I do not like Wells Fargo as an institution, because I thought that they really did some very ill-advised things with basically what turns out to be identity theft as far as I was concerned, and they really never paid the price that they ought to have. But, it was a good year for those. Just so I sold out all my preferreds, every one of them, about 3 weeks ago, because it was a nice year. And where else were they going to go? I'm not a buyer of. Yeah, I'm going to tell you what. If I can buy high quality corporate debt that pays a reasonable return, which it doesn't, I'm not going into the. Well, you know what? You may as well own WeWork bonds. How'd that work for you? You know, there's a lot of crap out there, and there are a lot of bonds that are still triple B, which makes them investment grade, but are on the verge of falling. Now, who asked that question?
Who did ask that question? Brett did.
Brett. Okay. Tomorrow at 1:30, 2:30 Chicago time, I'm doing a podcast. It probably won't get out until Thursday with Bookvar and Chris Whalen, who's so good at this. I will ask that question. You know, I've talked to Chris over the years. We've had a nice relationship. This is the first podcast I've ever done with him. It's through the Financial Repression Authority out of Canada. But this should be pretty good, so I may just post it on the blog. But Brett, we will talk about that because, you know, you can swing the questions because Whalen is just I think he's the best bank and credit guy in the country. I think his work is outstanding. The institutional risk analysis. It's one of my go-to reads. This is a pleasure for me. I've never done one with him. Bookvar, I talk to all the time, and I have great respect for Peter because he's so low-key for a guy who knows what he knows. He's just not yeller. He's a very down-to-earth, quiet guy. I enjoy my conversations with him. So, Brett, I will put that question out there. In fact, I'll keep it up in front of me. So we'll get his sense about it. I'm not.
Hey,
that's just a ship that will sail without me.
Peter Bookvar is brilliant and he's very entertaining. I'd love to have him in with us one of these days. But Ira, before I got to take off and before you take off, I just wanted to say, I wanted to echo something I heard you say when I was muted out about how, you know, this is what hedge funds do is have, and other institutions is they have these and they have these sorts of conversations and they hack them out and they really get to them. And like you said, right or wrong, you know, we've been right, we've been wrong, you know, but that's okay. And that's what trading is about. But this is how we do the work. This is how I've learned since I've known you guys when I was a young kid trader and learning from guys like Angelo and having Angelo learn from me and all of us learning from one another. And this is, I just wanted to say again, how much I appreciate what you've meant to me in my career. And as we move forward, you know, it's this truly, and I want everybody in here to everybody knows what you guys have meant to me in my career, and what you guys mean now. But, you know, I want everyone to understand, and I think they do, is that this is what we've got here is unique. It's very unique what we're doing here. And just, you know, there aren't too many people in the world that have access to a mind like yours, or access to and the no, really, and the information. And as hard as you work to pull together to extrapolate all that knowledge back down into your trading and how we talk about it in our own trading. Also, you know, I don't know anybody that can pragmatically analyze a market as Judd does.
Yeah,
you know,
well,
and so
Judd has that. He has that experience. Well, you know what? He sat with me and Steve McClellan. You know,
McClellan
absorbed a lot because that's not the way he approached the markets, but he learned how to approach the market, so he wasn't standing there. You know, it was like one of the biggest traders I know. Once made a comment when TPI was coming out one morning and we were having a cup of coffee. I said, wait a minute, you're a massive bond trader at the Board of Trade, and you don't know the impact of this? Didn't matter at all. Well, I never wanted to be subjected to that. You know what? That's just the way I operate. What the market is anticipating, what it's thinking about, so that I'm not just acting upon it.
Ira, you're kind of fading.
Now, oh, I'm sorry. All right, let me answer this last question because I got something. Somebody put something here. about the Fed, okay?
Yeah.
Who put that? What
That was
spooked me
Marlene.
personally is who said that?
Marlene.
Marlene. Yes, she always asks a good question. We're ready to buy coupons, right? So let me answer that, Marlene, because that bothered me too. And especially because, you know, I'm looking for curve steepeners, and if they're coming in to buy coupons, I'm going to get hit here. I'm going to get hurt. So when I saw that, I said, huh. And I said, that was him, that Jerome Powell reacting to Zoltan Pozsar.
Yep.
Oh, okay. So that's what I thought about that.
That's exactly right.
And he overreacted, yes.
So holiday difference. Security?
Thank you.
A particular color?
Thank you. Thank you. I appreciate it. I'm sorry.
She's asking you to repeat that because you're kind of fading in and out.
Okay, I'm sorry. So here's what I thought that bothered me too. Powell's comments. I was actually in a meeting. I was at a CME board meeting during the Fed, but I got the headlines pushed out to me. And then when I went back to listen to it, it bothered me because, listen, I'm looking for curve steepeners. And if the Fed was going to start coming in buying coupons, which meant, you know, probably not 2s, 5s, 10s, 30s, 20, whatever, to put the liquidity in, I stood to get hurt. So I backed out of the steepeners for about 24 hours until I could understand it. But I think that was the Fed responding to Pozsar, because Zoltan Pozsar got exactly what he wanted.
That's exactly right.
Why did he put that piece out 2 days before the Fed meeting, and even a couple days before that? I think he wanted to push the Fed, because now supposedly he's backed off a little bit, because the Fed again today was oversubscribed, but not much, and actually the repo rates have, you know, dropped back a little bit today. So I'm with Marlene. It bothered me, and I'm trying to understand it still, and I'm watching it carefully, but I don't think that's where they're going to play. And in fact, somebody said when I forgot who I was talking to, maybe Bookbar, because he read that as, and other people did too, as short-term coupons, so that they were going to actually wind up buying 2-year notes, which have a coupon. And that's where they were going to push at. But that's all conjecture. There's nothing, but it's a good question, and it bothers me also, and I'm still thinking about it. So thanks for putting that out there. And with that,
can I ask one follow-up question? I know you got to go, and I got to go too. The nurse is staring at me, I think. But let me just follow up real quick, and because we kind of addressed this on Friday when the Fed kind of announced this unofficially. This was a reaction to Pozsar, I believe, and is this really kind of pushing off the inevitable? So the Fed injecting hundreds of billions of dollars, I think 300 billion or something, you know, towards the end of the year. So is this to stem off or to take away the possible collapse going into another repocalypse, or however you say that, in the last couple of weeks of the year, and just pushing it off until 2020, or is it, am I reading too much into it?
No, that's a possibility. And as again, I saw Alexandra Harris on Bloomberg Television today, and they asked her that same question. And again, and she gave the right answer, I'm proud to say, which is, how are they going to exit from this? They've just put 400, maybe 500 billion into the funding markets. How do you exit from this?
That's absolutely right. That's my question too.
And,
no wonder she's my favorite author and correspondent.
And if you think that they're going to do that, and you've seen the S&Ps now rally, what, 10% on the back of this over the last 3 months? What's the rally been? What's the percentage of the rally from September when we first saw that jump up to when they started
Ira, you're spot on, because if you look at a chart from late August of non-QE4 and overlay that to the S&P, I'm not going to say 1-to-1, but I'll say 1-to-1 for emphasis.
Yeah, but it's probably a 10% move. So let me ask you, what are you hanging around for? If you think that's going to happen, what are you hanging around for? In the equity markets, I mean, what are you hanging around for?
Mm-hmm.
You got all you're getting.
Wearing my trader hat, I'm hanging around for another 200 points. My investor hat, I'd be getting into cash.
Yeah. Okay. Well, your trader hat, you're nimble enough. Traders
That's right.
are nimble. Investors, they're gonna wait.
Mm-hmm.
All right, I gotta go get ready for another meeting, and the great Marty Block is coming over. Okay.
I'll say hi to Marty.
I will. All right. I'll talk to you guys. This was another good one. I think we've covered a lot of ground. This was basically tonight's blog, in a much more, because I can't write this much, but I can discuss this much. So thanks, and we'll be talking.
All right.
Marlene,
Thank you. Thanks so much.
Good questions. Okay. All right.